This week, the global economy once again felt the weight of Washington's moves. Tariffs, inflation, a divided Fed, and a stark warning from Wall Street. Welcome to Finance Seed. This is your weekly economic breakdown, July 7th to July 12th, 2025. First, tariffs back in the spotlight. The threat just got real. Donald Trump has announced that if he returns to the White House, he'll impose tariffs of up to 50% on key trading partners, including Brazil and India. Although legal teams have postponed the initial rollout planned for July 9th, markets are already reacting with caution. Sensitive sectors like tech, autos, and manufacturing are now reassessing supply chains, anticipating a new chapter in the trade war, this time with broader targets and strategic intent. Second, the Fed's internal split. Fed Chair Jerome Powell maintains his stance: no rate cuts until inflation shows real signs of easing, but behind the scenes, divisions are emerging. Some Fed officials argue that a cut might be necessary by late summer if job growth slows further. Meanwhile, JP Morgan's Jamie Dimon issued a warning. Markets are being too complacent. He says there's a 40–50% chance of more hikes, compared to the 20% probability priced in by investors. Third, markets, optimism vs caution. Despite rising uncertainty, equities ended the week on a high. The Nasdaq outperformed, driven by AI and semiconductors. But a look beneath the surface tells a different story. Treasuries and gold are gaining traction, classic signs of institutional caution. The VIX index is quietly climbing, hinting at rising volatility ahead. Fourth, global macro trends. The global PMI rose slightly to 51.7 in June, led by industrial growth. But the services sector is losing momentum. The IMF and World Bank now forecast global growth at just 2.3% for 2025, the lowest since the 2008 crisis, excluding pandemic years. At the same time, the OECD reports inflation among developed economies has dropped to 4.0%, its lowest level since 2021. Progress? Yes, but enough to call it a soft landing? Not yet. Fifth, economy and defense merge. In Brussels, the economy is being redefined through a security lens. The EU's Stability Pact escape clause is under review, to allow more defense spending across member states. The new keyword is geoeconomics, using tools like tariffs, subsidies, and sanctions as strategic weapons. Trade is no longer just about efficiency, it's about national security. Sixth, energy and climate pressures. OPEC Plus announced a production increase of 548,000 barrels per day starting in August, putting downward pressure on oil prices. Brent crude now sits below $68/barrel. In parallel, Europe is suffering a brutal heat wave. Spain and Portugal have already reported over 1,000 heat-related deaths. The climate crisis is no longer tomorrow's risk, it's reshaping markets today. So, what to watch next week? Next week we have key inflation and employment data in the US and the UK, Q2 GDP figures from China, and the market response to Trump's tariff threats. Summer's heating up, and so is the economy. These are the closing thoughts of this week. Global growth is fragile. Inflation is cooling. But geopolitical and climate risks are rising fast. Is this just a phase of transition, or the start of something deeper? Let us know what you think in the comments. Are markets underestimating the risks ahead? Don't forget to like and share this video to help others understand the hidden forces shaping our economy.